Mortgage rate bait and switch. Is that too tough of a term? That doesn't happen anyway, or does it? Stay tuned. I'll be right back. Hey, everyone. Welcome back and welcome to another episode of Inside the Deal Through Michael's Eyes, where I try to bring a fresh take on real estate and business in general. It's about doing business the right way. My name is Michael Renick, and I am your host for this podcast. After a 31-year career, I retired from General Motors at the young age of 52 and moved right into building my real estate career. The purpose of this podcast is to combine both my GM business and my real estate experience, and it goes beyond the surface, offering a candid look at how business should be done right. That's one of the reasons for the topic today. Whether you're navigating the complexities of real estate or tackling broader business challenges, education is one of our main goals. Let me bring on my partner in crime for today. This is Don B. And let me introduce him. This is a man I call the mortgage coach, and let me explain why. When my clients need a great mortgage person, Don is the only one that I refer them to. Over the years, he has demonstrated the same passion as I have, that doing business the right way is the only way. As we all know, the mortgage process is a complex one. With an extended partner such as Don, we have someone that guides my clients seamlessly through the process and delivers a quality product each and every time. What I personally like about Don is that he does not offer excuses, but instead he works to find a solution, even in the most difficult cases. Don, welcome back.
Well, good to be here, Mike. How are you today?
I am doing well. We had a couple of glitches with technology early on today, but we seem to have those behind us. As we move into 2025, I want to partner with you and do some more hard-hitting things. So, like, for example, we've all seen the ads. Get a mortgage, 4.5%. Sounds great, right? But what we all know is that almost no one qualifies for this rate. In my mind, it's one of the biggest scams in the mortgage industry. I call it bait and switch. You can tell me whether that's too tough or not, but let's pull back the curtains, Don. Let's have that discussion. What the heck is going on?
Well, there's a number of things going on. The first thing that we all have to realize is there are interest rates that come from directly from Wall Street, from the market that trades what's called the mortgage-backed security market. And then from that market, it has to go through a lender to the consumer, or sometimes to the lender, to the broker, to the consumer. So depending on how many steps there are to get that loan to Wall Street into a security, will identify the price. But one thing that everybody has to realize is that base price that you're getting from the market, and I say the market, the bond market, is a base price. Then it goes through Fannie Mae's little, I'll call it the juicer. So it goes through Fannie Mae.
Juicer? Oh, you got to tell me more about that. I like that. I'll have to have my little swig of water here for that.
So it goes through Fannie Mae's juicer, then it goes through the lender's juicer, then it gets to you. And I know I'm being harsh with that term, but the bottom line is Fannie Mae, and you can all look it up, they're called LLPA, Loan Level Price Adjustments. It's a standard throughout the industry. Every lender that does a loan and sells a loan to Fannie Mae, or Freddie Mac for that matter, has to run it through the Fannie Mae Freddie Mac juicer, which is the loan level price adjustments. Those adjustments take into consideration the type of property you're buying, your credit score, your down payment, in some cases, your debt ratio. How many days do you need that rate secured for? Now I can go on and on and on.
If I understand this right, when I call someone about a mortgage, say I want to get a mortgage, I give you a call, I don't know you. Excuse me, I apologize. That's why I was drinking the water. I was trying to head that off. That didn't work. So it's this beautiful Florida air today. If I call and I've got a very ethical mortgage broker on the phone and I say, what's the rate? And you give me a rate, you're probably automatically going to put a comma there and say, Mike, but we need to talk about these other factors that go into that. Is that a true statement?
It's so frustrating because, Mike, I think before we started this little session here, I said I have this conversation honestly every day, multiple times a day, because what do? You get that phone call that says, I'm shopping around, I want to know what your rate is. It's literally, let me just say this. If a lender quotes you a rate without asking you some other questions, run.
Yep.
I mean, you got to run, because all those items that I just mentioned are pertinent. We didn't even talk about, is it an FHA loan? Is it a conventional loan? Is it a VA loan? Is it a USDA loan? Is it adjustable? Is it a jumbo loan? I mean, there are some interview things, and I'm not just being, I don't want to make it sound complicated, but because
it is kind of complex, right? Let's
well,
take down the list.
But for the consumer, it is.
So let me ask you, and even to me, as a real estate broker, I've told you the story when I got my license. They brought in a mortgage guy to spend a day with us, and I wasn't taking any notes. And he kind of called me out, said, Mike, what's going on? And I says, I only need to know 10 things about mortgages. He says, Mike, it's a lot more complex than that. And I said, no, it isn't. He said, what are the 10 things? I said, it's Don's phone number, 941-227-7618, because I don't want to be an expert with mortgages because I couldn't do a good job and do real estate. But let's tick down the list. So the rate you're going to charge me, it's going to, part of it, one of the factors, yes or no, my credit score.
100. Well, that's one of the biggest factors for sure.
Number 2, how much debt do I currently have? Is that going to impact it?
Depending on the product. So I'll say maybe.
Okay.
But it could.
So the higher debt I have, the closer I get to the upper ratios, the riskier the loan is going to be.
Riskier the loan. And by the way, whenever we're quoting interest, what does a lender do, Mike? A lender mitigates risk. We underwrite risk. So all those things that I mentioned to you are some risk factors. Mm-hmm. And the other thing to consider is when you start layering them, think about this. I've got a borrower with a lot of debt. Then I've got a borrower that's putting no money down. Then I've got a borrower that's needs to close in 90 days. So I'm layering and layering the risk, which basically, unfortunately, raises the rate.
So all of those and other factors, you get home appraisals and all that kind of stuff, but this whole field is complex. But I think bottom line is when you see an ad that I can get you a mortgage for 4%, I like what you said a few minutes ago, you run really fast the other way.
Well, here's the reality, which is it's a shame, but this is what happens when you're reading those quotes on the internet or in the newspaper. I almost said in the newspaper. How many? Who's looking at a newspaper now?
What's a newspaper?
So once you look at that, what are you going to quote? If I'm a lender, I'm not going to quote the worst of the worst of the worst. I'm going to quote an 800 credit score, 40% down. You're going to close in 3 days. You're going to buy a single family property, a 1 unit, not condo, no points, maybe an origination fee. I'm going to layer so this is the other way. I'm going to layer all the good stuff so that I put a rate out there that honestly, it is possible that somebody could qualify for that, but it's highly, highly unlikely. So Mike, what I do, and I say this with all sincerity, everyone, call me. I tell somebody, if you can get that rate, I'm telling you, lock it today. If anybody's listening to this podcast right now that has talked to me,
wait a minute. If anyone's listening, for all of you that are listening, I told you we're going to do some things different, didn't I?
If we had, I promise you, we had that conversation because what happens 99 times out of 100, the call comes back and said, yeah, I couldn't close in a week. Well, no, your contract says 60 days. Your contract says 30 days. What good is there? And the lender will say, that's okay. It's normal that you float. Well, what happens when you float? You're at the risk of the market, up or down or whatever it's going to do. So what good is that rate?
You said something that tweaked a little pet peeve of mine. So I'm going to deviate for a second. So I love working with a mortgage broker. We have an executed contract, like you said, and say it's going to close in 60 days. So I call up the mortgage broker, not you, but someone else that the buyer is using, and they're saying, and I say, closing is on 60 days. That's June 1st. Let's make up a date. And he or she will say, well, that's our goal. What do you mean goal? We have an executed contract. The buyer has some substantial risk if we don't get this thing closed. So I don't need to talk to someone about a goal. If you accept the deal, that's a fact. Do you agree with that, Don?
And what more important than that, Mike, the commitment date. Everybody looks at that closing date. I can't tell you how many times the first thing I look at is the commitment date. And then if I think I can't meet it, I'm bringing that up today. Why do I need to bring it up the day before commitment if I'm thinking that we're going to maybe have a difficulty for whatever reason there is? And I can get in the weeds with what could affect the processing time of a loan, but put that aside. Mike, just what was it? What's today? Monday. What day is? Whatever day today is.
Today is Monday.
On Friday, I had a call from a real estate agent, a really good friend of mine, and said, we're supposed to have a closing tomorrow.
On Friday, they called?
What's that?
They're going to have a closing on Saturday then?
Well, it was Thursday. We're supposed to have a closing tomorrow, which is Friday. Forgive my days. It literally was, we're supposed to have a closing tomorrow, and lender canceled the loan. Denied the loan. And I said, how long has it been in process? Bottom line is, this situation was one where there was another factor involved, which in all honesty, I would have found out from the very beginning. Why put people through all this? Anyhow, I'm getting in the weeds here off track. But the point is, when you're quoting a rate and you're calling that lender and saying, if they quote you a rate without asking you any questions, here's the facts of why that rate really isn't worth the paper it's written on, because they need to know more information.
Well, there's another factor that we haven't talked about. And as you know, I have my notes over here on the side that I can take a look at. But the rate, is it adjustable or is it fixed, right? That's an impact into the rate.
For sure. And, adjustables, in recent years, it hasn't been a big part of the market, which I'm a fan of adjustables. But right now, with the inverted yield curve, it's flattened off now. So let's call it a flat yield curve. Adjustables are the same rate, the same interest rate as fixed. For the most part, the margin isn't big enough for them to make sense. So we haven't talked about adjustables a lot lately, but it will come back, and there are break-even points with all that. But the other thing we didn't talk about, Mike, were discount points and fees. It's all relative to that quote you get. So not only do you need to, it makes me frustrated because it shouldn't be this difficult, but there is some deceptiveness with this. And if I quote you an interest rate without telling you what the discount points are or the fees,
got it.
What's my rate? And everybody will say, well, it'll be reflected in the APR. Well, guys, when you're quoting a rate over the phone and you're giving me an APR, what's that APR based off of?
Got it.
I got to get the weeds, and I need an itemized list of those fees.
So maybe these are the warning points. If I could summarize from my mind, my take from this podcast is, if you're given a rate and it seems lower than what other lenders are quoting, run the other way. If the lender won't show you a loan estimate right away, run the other way. One more point. If they push you to lock it in before explaining the terms, run the other way. Does that make sense?
And that's the other thing. They can lock it, but once they start validating the items that we're talking about, the rate's going to change. And they're going to say, well, I didn't know you were a 630 credit score. That rate I quoted you was for 800. So here's the adjustment for that. And it's going to be, ready? Not their fault. So what happens now? They've got you on the hook. And now you're a week or two into this transaction. What are you going to do?
You're hosed. Is that a good word for it?
Well, you've been misled. You've been brought into the pipeline, brought into the process, and then they hope that in some cases you're too far down the road for you to leave, so you stay and pay the and it costs you money.
So what I teach everyone, all my agents, that there's two lines, and it applies to mortgage folks. Number one line is, where's the legal line? Let me put it on this hand. Number two is, if the ethical line is up here, I require everyone on my team to behave at the ethical line. I will not allow them to come down to the legal line if it isn't right. And some of the things you're saying may be legal in terms of quoting rates, but it's not the way to run business. That's what this podcast is all about. How to do business the right way. It's about transparency. It's about honesty. It's about truth. And Don, that's why you and I have had a partnership for as long as we have.
Yeah. Well, and I'll say this in fairness, whenever you get the quote, the interest rate and the APR, it's going to be correct for those.
Yeah. Oh, I agree. But those factors don't fit the buyer.
I hope everybody understands, because everybody says, well, what's your APR? I got to know more. I got to know more.
And that's the purpose of these podcasts. It's education. It's talking about how business should be done the right way. It's transparency. It's truth and honesty. It's hitting the ethical line, even if the legal line's below. I never want to catch an agent below the legal line, but even in this gap that I'm showing on the screen right now, let's do things the right way. That's how you get the most business. That's how you have the happiest clients. Make any sense?
I'm with you.
Don, two things as we close. Pronounce your last name correctly and verbalize your phone number for folks that are just listening to this.
Don Bartolomucci, phone number is 941-227-7618.
And I'll leave you with one question, no answer required, but as a thought starter. After all these years of working together, why do I butcher your last name and you can say it so easily? Don, thank you.
I'll have an answer.
All right, take care.